Explain to us exactly what these new regulations having to do with e-commerce in India are and why were they adopted?
So for almost a decade and a half in India, the e-regulations or the e-commerce business was based on a business-to-business model, or how we call it, marketplace economy. And because of the surge of internet users from 450 million in 2017 to almost projected to be 800 million in 2020, there was a surge in e-commerce, and in 2016 the government came in to legitimize the existing model of B2B or marketplace models, as we call them. That meant 100% FDI was allowed. There was a surge of companies coming in to make that investment. December of last year, the government came in with a further pronunciation or definition of what they meant by marketplace models and prohibiting inventory-based e-commerce. That surely means that there's a certain amount of disturbance in the existing business model for e-commerce companies. But I think the other view also is that the e-commerce industry in India is growing so rapidly that the regulator and the regulated, both of them are learning off each other, evolving simultaneously. But the end benefit is for the consumers, because the regulator wants to make sure that the consumer is not coaxed into buying something online, and the e-commerce giants, so the companies, want to make sure that the consumer gets the maximum choice whilst they're making online purchase.
So, Ridhika, I think we focused on the United States in part because of Amazon and Walmart moving into the e-commerce business in India. Do these new regulations apply equally to domestic e-commerce companies? Were they equally disrupted? Because we heard reports that, for example, Amazon had to take a lot of products offline. Was that true for the native, as it were, Indian e-commerce companies?
I think what the regulation is trying to do is making it an equal, level playing field for most, whether domestic or international companies, to make sure that inventory is still prohibited for all e-commerce companies. But how the consumer is getting affected, I think the jury is out on that, because the statistics that I gave you on e-commerce, which is almost $38 billion in 2017, projected to grow just about $120 billion by 2020, surge of internet users, all of that. E-commerce constitutes right now just 2.5% of the total retail trade that happens in India, and it's projected to be 5%. So saying that the consumers might just get affected and the economy is going to come down, I think it's a little bit of a stretch, and it's yet to be seen how it's going to affect.
So then, to that point, Ridhika, if you're a foreign company like an Amazon and a Walmart, you've already spent billions trying to access that e-commerce area in India. Is that going to continue to be a good bet for those companies, or do they need to rethink the strategy?
I don't think it's a bad bet, because Parag Khanna, who came up with the recent book talking about Asia as the next market, I don't think it's a bad market. It's evolving, it's growing, it's at a rapid speed. I don't think it's a bad bet for most of the companies. It's all good, I guess. No red flags, I would say.
Finally, Ridhika, just to give us a minute on the battleground over digital in India. We have both China and the U.S. really battling it out in India. How is that playing out?
That's playing out quite interesting, a space to watch out, because most of the tech giants from America who would go into India, they would set up their outposts with the brand names continuing to show as Amazon or Apple or Netflix or Google and so on and so forth. How the Chinese would make investments in India is through portfolios and venture capitals. So normally a company which has a stake from a Chinese Alibaba or Baidu or Tencent, the consumer wouldn't know that the head company or the umbrella company is a Chinese company. For example, a very good example on that is UC, which is a browser from Alibaba, comes as a default installed browser in most of the Chinese-made phones. That kind of influences the consumer behavior and captures the mind space of the consumer. So UC's market share in India is just about 51% in comparison to Chrome, which is 30%. And outside of India, UC 16%, and Chrome is just about 51%. So that's an interesting space to watch.